Joining me right now is the host of Making Money with Charles Payne and the author of the new book, Unbreakable Investor. Charles Payne back with us. Charles, congrats on the book, Unbreakable Investor. How do I become an unbreakable investor when I've got weakening economic data?
Well, that's what you do. You survive these times and you don't panic. You know, yesterday we saw the American Association for Individual Investors, that survey. It's a weekly survey. So over 50% bearishness right now as of last week. Well, guess what? We just had the best 4 days of the year. Other times it's gotten over 50%. Try March of 2020. We went on a rally out of this world. How about March of 2009? It was 70% bearishness. We went on a decade-long run in the stock market. So first and foremost, it's not about the stock market, Maria. We know it's about owning great companies and learning how to value them. And by the way, taking the hits. A lot of the book is emotional. It's about how to survive when you have to take losses, how to take losses. Those are really key and critical. I got to tell you, this earnings season, I've had some major hits this earnings season because almost every earnings season you get them, but you regroup and the most important thing is you got to stay in the game, you've got to do the work, and you really can't be discouraged because you have to see opportunity when a lot of people would see no opportunity. So, listen, I've been helping people since 1985. I started on Wall Street at E.F. Hutton. And I have my own business for over 3 decades. Every single day, I've been helping individual investors for over 30 years. I know what makes them tick, and I know the mistakes they make, and that's why I wrote this book.
So is it a mistake if I see a market that has a big move and then I try to buy into it, I sell into it because I think that big move may have suggested something has changed? Or do I just wait it out, and see how it goes? How do I know if there's been a structural change in my story of the reason I bought those stocks, and do I move on it?
Well, we get this report card every 3 months that we call earnings season. And that's the best time to make your assessment. You make 2 assessments. You make the company assessment and you do a peer-to-peer assessment. To your point, we took profits on Apple on a recent position in Apple a couple of months ago. And it's starting to stall here. Conversely, Amazon, which is another one of those mega, magnificent 7 stocks, looks relatively inexpensive. Meta still looks inexpensive. So you have to look at it stock by stock. There's absolutely no doubt about it. But another point you bring up, things have changed. The role of the Federal Reserve, for instance, I've got a whole chapter there in the Federal Reserve. It is far too powerful. Just think about this. Every single morning, we have to wonder what Jay Powell is thinking. That is too much. We should not be, tethered to the Federal Reserve when we're trying to invest in great companies. So that's important. I got a chapter on Warren Buffett, who I call the original diamond hands, because we can learn a lot about him, how he accumulated Coca-Cola when everybody else on Wall Street thought it was dead money. So I've got some interesting stories in there, and also a lot of personal stories on the things that have motivated me, because it's not about getting rich quick. It's about changing your standard of life just enough so that your next generation can reach their goals sooner.
And I agree with that, because investing in equities over the long term will always be your best bet to accumulate wealth. Charles, you are unbreakable, my friend.